If you had 500,000 to invest in property, would you go to regional Queensland or regional Victoria? Now, the obvious answer might be regional Queensland, looking at how fast prices are rising in that region. But there might be some opportunities in regional Victoria that you may be overlooking. So in this video, I'm going to run through property values, market conditions, and what the future holds for these two regions so that you can make an informed decision. Hi, for those of you who don't know me, my name is Jathu. I'm a buyer's agent for property investors, and I buy properties all around Australia using a data-driven approach. So if you want to work with me directly, go to my website propertyframeworkbuyersagency.com.au and book a session with me there. Now, when I'm talking about regional Queensland, I'm specifically referring to Townsville, Rockhampton, and Gladstone. And when I'm talking about regional Victoria, I'm looking at the big regional centers of Geelong, Bendigo, and Ballarat. So when I say regional Queensland, regional Victoria, these are the markets that I'm referring to. Now, the first one, let's look at the unemployment rates. In the regional Queensland, the unemployment rate is between 3.7 to 5.1%. In regional Victoria, it's between 4.1 to 4.7%. So fairly healthy economy. The unemployment rate is fairly low in both these regions. Now, if you look at the investor sentiment, which is point number 2, the investor sentiment in regional Queensland is very positive. Investors have been piling into regional Queensland over the last few years because of how fast property prices are rising there. When it comes to regional Victoria, there has been a negative sentiment amongst investors. And that's because of things like land taxes, policies that are favoring tenants over landlords, and a stagnating market in regional Victoria. Now let's look at point number 3, which is the growth. Now, over the past 1 year, regional Queensland did 20 to 25%. Over the past 3 years, it did 40 to 50%. And over the last 10 years, it was between 50 to 60%. Now, if you look at regional Victoria, it's the opposite. Over the past 1 year, it only did -5 to 0%. Over the past 3 years, it did -8 to +8%. And over the last 10 years, it did 70 to 80%. So you can see two contrasting markets. Regional Queensland accelerating in value over the past 3 years, while regional Victoria is stagnating or declining in value during that same time frame. Now let's look at what type of markets we are in. So regional Queensland is what you call a hotspot market. So a hotspot is where property prices sell for much higher than the asking price. So you would have to kind of overpay or pay a premium to secure the property. But that also means that you can get solid short-term growth. Over the next 3-4 years, you might get a 50% increase in your property value. With regional Victoria, we're in a different market. We are in a cool buyer's market. So that means you can negotiate hard and get discounts on the property. You're not going to see any short-term growth. So maybe over the next 1, 2, 3 years, there might hardly be any growth. But then if you look at that 10-year period, you might have a lot of opportunity in regional Victoria as the market recovers and comes back. Now, the next point is the growth cycle position. Now, in regional Queensland, the market is well into its growth cycle, and there might be about 2-3 years left of solid growth left. And after that, the property prices may start stagnating. Whereas in regional Victoria, we're at a dip, and the property prices might continue to dip or stagnate further before it recovers and starts another growth cycle. Now, we want to understand the historical growth patterns of both markets, right? So regional Queensland has known to be a market where property prices go up in value fast, and then they stagnate for a long time and they go up again, right? So between 2002 to 2008, there was a rapid increase in prices. And between 2008 to 2019, there was nothing happening there. And then since 2019 onwards, the market has gone up again, right? Whereas with regional Victoria, it's not that type of market. It's a market where prices rise slow and steady. It doesn't go into the negative territory for too long. It doesn't stagnate for too long. It's just slow and steady growth. So different type of historical growth patterns in both these regions. Now, let's look at the rental market. So the rental market in regional Queensland has really tightened and rents have increased a lot over the past couple of years. In regional Victoria, the rental market is strong, but not as strong as regional Queensland. However, we still see that rents have risen in regional Victoria over the past 1, 2, 3 years. So in both regions, we're having fairly strong rental markets. The rental yields in regional Queensland is about 5 to 6%, whereas in regional Victoria, we're looking at around 4 to 5%. So there's a difference in the rental yields. Now let's look at the value for money, right? Now if you look at solid low-set brick homes, you'll be struggling to find something in regional Queensland for under 500,000. Most likely you could find high-set homes or weatherboard homes or brick homes which are in a poor condition for under 500,000. But if you come to regional Victoria, you can find good quality brick homes in good conditions for around 400 to 450,000. So that represents a lot of value for money in regional Victoria. And the next one is proximity to capital city. Now with Queensland, there's nothing around Brisbane within that 2-hour radius which is under 500,000. You're finding these markets like Townsville, Rockhampton, Gladstone, which are well away from the major capital city. But in regional Victoria, you're talking about markets like Geelong, Bendigo and Ballarat, which are just 90 minutes away from Melbourne, which is a world-class capital city. So you can see property prices only at 450,000 sitting in close proximity to Melbourne. You can see that they are undervalued and represent a lot of value for money. Okay. And then we want to talk about natural disasters. Regional Queensland is prone to natural disasters like floods, cyclones, etc. In regional Victoria, you don't have all those risks, right? So over the long term, regional Victoria might be a safe investment option. And the last one is the type of strategy. Now in regional Queensland, a buy and hold strategy would work. You just buy a property and hold it, and then you get the rise coming through in the next few years. In regional Victoria, this might not work. You might have to go for a cosmetic renovation strategy where you buy a property, do some cosmetic renovation and get some equity uplift that way. So that's pretty much the summary of regional Queensland and regional Victoria, guys. I think you've got an understanding of the type of market they are. And I think to sum it up, an investor who's buying his property for the first time, I wouldn't go into regional Victoria. I would recommend regional Queensland to get that solid short-term growth, get that growth to buy the other property and expand your portfolio. But if you are someone who already has 3 or 4 properties, you're not dependent on equity from this property to buy another property, and you want a property that will perform over the long term, then definitely go into regional Victoria, because you might find that a 450 property would become 900,000 over that 10-year period. So I hope that helped, guys. Please like and subscribe to my channel, and I'll see you in the next video.